Welcome to Planet MicroCap. I'm your host, Robert Kraft, and joining me today is Mike Flum. He is the president and COO of CreditRiskMonitor. It's a publicly traded company. The symbol is CRMZ on the OTCQX. And CreditRiskMonitor will be participating at our upcoming investor conference, the Planet MicroCap Showcase, happening in Las Vegas, April 25 through 27, 2023. They will actually be on Maj Soueidan's top tier track at the event. So if you'd like to see that and participate, please visit our website, planetmicrocapshowcase.com. And with that, Mike, thank you for joining me, man. How you doing?
I'm doing well, Robert. Thanks for having us back. Excited for the conference.
Absolutely. It's great to have you, and we're excited to see you in Vegas. So we actually did an interview together on the due diligence series, long form interview. So I invite everybody who's listening and watching this today, go check that out. It's going to get the full picture of what's going on with credit risk monitoring, supply chain monitor, as well as hear Jerry do his thing, of course. But for our purposes today, I want to do a short form to kind of get a real snapshot of the company for those that may have missed that interview and also in advance of the conference. So start us off, give us that quick overview of the company, and then we'll go from there.
Yeah, sure. So, we've been operating for over 24 years now. We really service the risk management professional groups within kind of the trade credit or the accounts receivable space and the supply chain space, looking at kind of third party or counterparty risk management. So our focus is really much more predominant on the financial risk components, but we do offer, a variety of different other risk mitigation insights. And we've got, we're kind of a B2B SaaS platform, if you will. As you mentioned, we've got kind of the credit risk monitor platform for that trade credit space. And then you've got SupplyChainMonitor, which we launched back in May 2022. So relatively new, really focused predominantly on that supply chain or procurement use case. We've got 1,500 corporate clients around the world, including nearly 40% of the Fortune 1000. So we're pretty well established as far as, the brand.
Very good. And Mike, so like I said, we did that interview. We published that on March 2nd, 2023. I believe since then the company's put out earnings. So let's give everybody an update how the company performed in 2022. And
yeah, so our revenue growth rate was about 5.5%. We're just under about 18 million now in run rate. So we're reoccurring revenue stream business. So every year we book that kind of towards the end, the start of the subscription period. I think kind of the bigger thing for us is when we look at, our net returns and our tangible net worth, we're looking pretty good. I think right now EV to revenue is something around like 0.66 as a revenue mat. So, when you compare that kind of to the general SaaS average typicals between 3 and 10, we've been generating pretty nice, net income margins and gross margins to start with. So, I welcome everybody to check us out. It's up on the SEC site. So if you have any specific questions for the conference, we can definitely dive into financials. But, as with everything, we're struggling with the whole inflation environment too. So doing everything we can to make sure that we can control our costs and keep those margins up.
absolutely. So then, Mike, from what you can tell us, in your opinion, what would you say then are some of the company's value catalysts now for 2023?
Yeah, I think that's a great question. Obviously, the recessionary concerns are generally accretive for the trade credit business. Once everybody experiences a few bankruptcies and cash becomes king, all of a sudden, we stop having to make the FUDs argument about why you should be concerned about this. So, I think that's a big one for us. We're expecting that, credit and collections are going to become increasingly important over that period. I think on top of that too, we obviously did just launch this supply chain monitor product. I think everybody in the world is aware of kind of what's going on in that space, but you got hot and cold wars going on. You've got, essentially reversions from things that have been 40, 50, 60 years in the making in terms of globalization and, complexity in supply chain. So rejiggering all of that with nearshoring and friendshoring, there's a lot of alternative supplier functions that are kind of being rolled out these days. And obviously spend management becomes really big in recessionary environments too. So we think those are big ones. I think the other thing too is just generally reversion to mean within markets. We kind of are counter-cyclical, or at least somewhat counter-cyclical. So we view this as kind of a major reversion to mean after, we've been pretty much living in zero interest rate policy for the last decade plus. So not exactly the greatest environment if you're selling risk mitigation, software or insights. But we're excited for that to kind of maybe revert to mean and kind of get back to that capitalistic, almost you got to burn out a few of these zombie businesses to reallocate capital effectively.
Absolutely. All right. So Mike, to close us out here today, you guys are going to be presenting in Vegas. You're going to be doing one-on-ones and stuff like that. We're going to put this interview in your company profile page. So for folks that, might be evaluating whether or not they should want to book a one-on-one with the company, what would you say are those 3 reasons why they should?
Well, I mean, if you're operating in microcap, I'm assuming you're probably more interested in sort of value principles to start with. So I would say number one, you can listen to Jerry's whole insight on how this business was formulated in this first place on that podcast you referenced, because he does a great job of kind of breaking out his principles. But we're very much a value investing based kind of anti-fragile concept. For anybody who's familiar with kind of those Nassim Taleb concepts, but we're much more of a tinkering approach. So I think we're an interesting investment, assuming that you're approaching it from a long-term owner's perspective, right? All these caps are hard to get in and out of, but we certainly have a very robust balance sheet, no debt. We're not a company that's going out without a serious fight. So, I think the other things to kind of point out is we've been pretty consistent in our long-term growth, or revenue growth, at least over this decade, and that's during a period that I would kind of consider to be almost recessionary for our style of business. So, I think that's kind of maybe number one, something to point out in general, right? We've been able to maintain our revenue growth, at least while we're in a negative environment. So we expect that, with these things kind of changing in the recessionary space, that should only be good for both sides of our business.
Well, Mike, with that, where can our audience go and find more information on Credit Risk Monitor?
You can check out our new website. Actually, it just launched back in February at www.creditriskmonitor.com. Gives you insight on everything we do, a bunch of resources. We put out a bunch of thought leadership pieces as well. So that'll give you some good ideas about kind of the way that the services work and how clients actually interact with it. But if you do need anything else, feel free to shoot me a line too. I'm M Flum, FLUM at creditriskmonitor.com.
Mike, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. And I'll see you guys in Vegas.
Yeah, same to you, Robert. Looking forward to it.